bring in Fari Hamzei of Hamzei Analytics. He joins the show every Wednesday, bringing his wealth of knowledge on aggressive equity options and future index futures trends. Bree is dialing him up here, but while we do, Dennis, any imbalances scroll by you?
Interesting enough, Wells Fargo, and I can see the order in the book here. I'll try to get this in. It's 57. There's
Watch
140,000
Commander.
sell. Watch Commander. What's going on, Watch Commander?
I don't know. I'm just not in a good mood.
Okay,
I
why
had
are
a
you
couple of
not in a good
boo-boos
mood?
yesterday.
Is Twitter making you in a bad mood?
Twitter is one of them, and then this BAWA stock called VDSI. One of our members in the chat room said, "Let's take a look at it." And
What stock is that one?
Not there.
Which stock?
VDSI. It's a security stock.
Oh, okay.
Victor Delta.
Yeah.
Sierra, India. It just, I don't know. Maybe I should just stick to futures.
It's one of those days, Fari. Everybody has those days. I've been in the industry for 15 years here, and I have bad days all the time. It comes with the territory there. If you're going to trade, if you're going to take risk, you're going to have some bad days. So shake it off, Fari. Don't give up on the equties. Stick with them.
No. I had a great day yesterday on the futures.
Well, there you
go. I throw some money on the option side for the earnings. It won't make me poorer or richer, but it's just frustrating for like Twitter. Numbers are great, and I guess the the conference call wasn't good, and they killed it. So.
It's all about sentiment here too. And that's what I was gauging when I thought Twitter might go lower. Actually, was just that it seems like sentiment matters more than anything, more than the numbers. And when you get everybody here saying, "Oh, they think it's cheap and it's going to get eventually taken out or it's over," there's too many people that short-term traders that are crowded to the long side. And when that happens, there's usually a shakeout. And that's the only reason that I was selling my Twitter stake yesterday was because of the sentiment coming in. I just felt that too many people were bullish. Too many short-term traders were bullish as well. And, I gauge that from, I use Twitter actually, coincidentally, just, to gauge sentiment. But you can use, CNBC, you can use StockTwits. There's lots of different places to gauge sentiment there. And overall, I just felt everybody's too bullish.
Yeah, but this is a big hit. This is almost 12%. It's 11.5 right now.
But it was $4 expected.
The dollar-wise is not a lot, but percentage-wise, it's quite a bit.
Yeah, but 4 points expected move on the straddle there yesterday, too. So it's kind of what it was expected, I guess. It went 4 up and 4 down. Man, it had a wild range there yesterday after hours.
Before we move on, Brianna and I both had a very delicious lunch yesterday. Fari, you totally outdid yourself. You found Zoop, which is a local soup place. But not only did we get soup, he sent a delicious burger for me and a delicious salmon salad, a couple soups. What was yours? A shrimp gumbo?
I believe it was a shrimp gumbo. It was
delicious. And I couldn't even eat it all. I still got some of the clam chowder. So, Fari, thank you very much. You outdid you outdid me.
My pleasure.
And boy, oh boy, I am up against it. And next time I lose a wager to you. But anyways, let's just go back to the Twitter now. Do you just kind of throw the baby out with the bathwater here? It's just a broken story here.
Well,
you're gonna try. And
here's what's going on. We also had 2 trades, takeover trades. We have bought long calls. Long duration, because if a takeover comes, you won't have time to put a trade on. You got to be already in.
Correct.
These were September's and December's. One thought was, if today is good, maybe we can retire the September one. Even though the December one will cover us through September also. Now it's just like bingo. Those 2 are pulled back slightly, obviously because of the theta is different, but the earning play was August, which was a call spread. We had kind of killed some of the theta, some, not all, and some of the vol, but X minus S is a big input on the Black-Scholes. We're down 11%, so I don't know. Maybe we should just close them all and just go with something else. It just it was not meant to be.
Okay. All right. So let's just move on to first. We always love your take here on the overall market here. Boy, big turnaround Monday near the close, follow through on Tuesday. Today we got a Fed meeting here, trying to rally back to all-time highs. Where are your Sigma channels, and what's your sentiment on the overall market?
We're below 50 bar, right above zero Sigma, so we're kind of very neutral area. A lot of the Sigma lines have been very flat in the last, I'd say about 8-9 days. About three of our, we look at something about approximately 8 indicators for timing. 3 of them showed a low day before yesterday, Monday night. But the VIX future spread was not. That was not one of them. As a matter of fact, yesterday it got worse because we rallied. It tries to pick the bottom and obviously signaled that, hey, this is not it. But we have a number of indicators that are not showing that what we went through was a low. So this could be technically a dead cat bounce. Only time will tell. We did hold the 200 bar. That was good. McClellan oscillator. This is for SPX. McClellan oscillator for NYSE was kind of oversold, but it wasn't really in a bad condition. It wasn't kind of a baby with bathwater. Also, volume was not that great. The down volume. So, all in all, my thinking is we should be short biased this week. Of course, yesterday was a big rally, but today we have FOMC. There was no press conference, just a communique. So we'll see how the market takes that. I don't know if we have anything big. I think we probably have GDP on Friday. We could have a couple. It's the last week of the month. A couple of data points there, but the big baby is the following week, which is for July non-farm payroll.
And what about anti-Jeanette? What do you think anti-Jeanette? What do you think the Fed's going to do here? Are they going to take? I mean, you guys, the consumer confidence was horrible yesterday. Had a big, horrible.
Well, that's a little bit laggard also, because also it's consumer. But that's true. But there was a post from Wall Street Journal I put on Twitter, I believe, yesterday. I just brought up 5 things to watch for a Fed meeting. I think it's pretty much on the point. Rates on the hold. Job market progress, inflation insights, consumer and growth, and then the era of good feelings. Well, last one was kind of a little bit fuzzy. But I think the main thing we should worry about is the comments about inflation, the comments about job market, the first 3. I don't think the rates are going to change. My feel is, given what's going on overseas and some of the numbers being bow wow here, I think they may start telling us September is not it. That if there's a rate change, would be maybe December. I don't know. That's my thinking right now.
Depends on what the market does. If we're sitting up there at all-time highs, they're looking at, and they do. They look at the market and it starts to get weak overall, and then they get scared. And that's always seems to be what happens when they think about raising interest rates. We have some type of, crisis overseas or something like that, and they get scared. I mean, they don't want to rock the boat with the market at all-time highs. They don't want to be the cause or, to be able to point the finger that, it was the Fed raising rates that, caused the market to go down. So, it's scary for them to raise rates. I think eventually they're going to have to raise rates, but, it's never going to be substantial.
Dennis, one of the problems here is that they don't have the analog. They've never been down here and for this long. The oldest studies and, other Fed actions in the past usually showed you would have 3 rate hikes before the market tops. Actually, the early rate hikes were good for the market, which basically said the economy is good enough for the Fed to raise rates, and that comment on the prices that bear more impact than the extra interest expense that would hit the balance sheets, or I'm sorry, income statements. So the first 3 used to be positive for the stock market as a whole, and then you would see the market faltering. Here, I don't know. From 0, I mean, what's the interest expense going to change if we go from 0 to 0.25 or from 0 to half? And there's no analog in terms of how people react. The hedges don't like it. because they're borrowing very cheap and playing with it, and so the fast money will not like it. You'll see their disdain about it in the marketplace. I think economy-wise, the impact is minimal. It's just a gesture. But the other thing is, I think they should do it and get over this first rate change. You know, everybody's fixated on this issue for how many years now? 3, 4 years?
Long time.
I think they're just going to get behind us.
Facebook earnings after the close. Facebook, the street, is looking for EPS estimates of 47 cents on revenue of nearly $4 billion. Steady growth in revenue moving up here in estimates. They've met it every quarter here, just about. What is the trade in Facebook before earnings?
Well, what is the whisper number? Do we have a whisper number on that?
I'm just seeing the EPS.
I mean, that's what the expectation is. That's really what the problem is. Oh, there we go. It's 49.
Okay.
Okay. You said 47 is the consensus opinion, right? So 49 is from what I see on our worksheets as the earning whisper number. Well, we're at 1 sigma right now on the daily. We're about 2 sigma on the weekly. Obviously, this month we made a new all-time high. We hit 3 sigma about twice, one in late June and one in mid-July. Well, 20th of July. We pulled back 3 sigma 3 days in a row. We pulled back. We're at 1 sigma. We had some good volume. Volume has been kind of okay, average right now. My guess would be there would be some. It's not what the numbers are going to be. It's most likely maybe there'll be some profit taking the next day because we trade options, so we have to worry about when do we get out the following day after the cash market opens. My guess would be probably be smart to be on the downside.
Fari, I just want to stop you for a second there. Do you ever trade the stock against your option positions? Because that's what I usually do when I have these option positions. And if you were trading it last night, on Twitter, and I know when you have the spreads, it's difficult to do because you obviously have both ends that you have to worry about. But if you're open-ended on one side, do you ever trade the stock against your option positions? Because you could totally have sold.
I have a few times.
Yeah, because
I have a few times. The most the most dangerous one I did was with Google once. Because we had a lottery trade, and he went in the money, okay, and the stock was ratcheting up pre-open. We wanted to lock it, so we had to hedge it, but it was it was scary, especially because Google has a high-priced stock and fast trading. I try not to. I try to say, look, it's risk capital. That is, I'm allocating a small amount of money. If it gets evaporated, it gets evaporated. I made it out of futures the day before or 2 days before. But on Google, the gain was too much, and we were trying to lock it pre-open. It was scary. I mean, because then you have to cover we have to short the Google up very high. Then you have to cover that when the market opens. So, too much. I try not to.
Two reasons why I like doing that, though, and I know it's difficult when you're in a spread because, you can't really hedge because you're already hedged. The spread is the natural hedge for the thing, so you're already hedged coming in. But when you're open-ended, the two main reasons I like doing that is, one, there's a lot less liquidity after hours and pre-market, so you can get these, ridiculous moves in the overshoots. And if you, for instance, had the 37.5 calls on Twitter last night, you could have sold the stock at 40, locked in a 2.5 point gain. Now you're done, but actually you're not done because if the stock falls back under 37.5, you would start participating again from your short position because then you wouldn't exercise your calls. So it actually gives you, a little bit of a position the other way there if there's a major reversal in the move. So that's the two main reasons I like to do is there's less liquidity, and I still, when I'm locking it in, I'm not actually sold the option. I've locked in the gains, but I still could participate if there is a reversal. So that's the two reasons why I like doing it that way. And usually when I have open-ended option positions, I almost always trade the stock against it. The downside is if you have really, a lot of contracts, it takes a lot of capital to do that, to actually trade the stock against it.
You're absolutely right. It's a great idea. I don't know why it didn't hit me yesterday. at the beginning when it went to 41, I said, "Holy moly! Okay, this is another good trade." And next thing you know, evaporated, and you just almost like you withdraw. You just withdraw from the screen. It's a heck with this. So you're absolutely right. That would be especially about the calls we have that are outright calls. The September and December's. That would have been excellent. Yes.
One more stock for you before we let you go, Fari. Gilead Sciences. Bucking the trend of Biogen here. Nice pop off earnings. Currently trading up quite a bit here. Where are we trading at?
116, 88.
Yeah. What are you thinking here on Gilead? What are the Sigma channels telling you?
Sigma channels hit a 3 Sigma day before yesterday on Monday, and a nice bounce. Now we closed 113 last night. We're up almost 4 points now. That puts it a little bit over 0 Sig. The 3 Sigma is 122. So I would think most likely if CIs turn around, look like CIs want to turn around here, and of course when the market opens, this starts moving. Most likely you're going to see somewhere in the 120 area. I'm not sure I would go 122 yet, but I would say it will try to race into 120.
Okay.
That would be what I would look for.
All right. We have been on the line with Fari Hamzei. He's the founder of Hamzei Analytics. He joins us every Wednesday, bringing his wealth of knowledge on aggressive equity options and index futures trade. He also delivered one fine lunch to this office yesterday, Fari. I gave the guy a nice tip. So thank you very much, and we'll talk to you again next Wednesday.
We'll look forward to that. Thank you very much.
Thanks, Fari.